This financials market update is for October the 7th, 2010. Indexes finished marginally lower today, but the NASDAQ was the only one that got a little bounce. That's probably because how hard we sold off yesterday. That was some minor short covering until today. And the dollar got a bounce today. Same store sales from September showed some strength, which was decent on the markets, which it didn't bring us down anymore. But we also had some negative news. Total consumer credit outstanding declined for the 7th straight month in August as credit card debt continued to fall. That's pretty obvious because I'd have to say at least 2 out of 5 people that I know have some kind of credit card debt that really can't even pay the minimum payment, and they have a hard time finding a job. So these credit card companies create credit out of thin air, and then they charge you so many high rates. I know one friend, he had a $200 bill. He was doing good, then he lost his job on his credit card. Now his bill a year later is over $700. So they just keep tacking on the fees, and that's part of the reason why the debt keeps continuing to rise in the credit card industry. Consumer credit falls 3.4 billion in August. That was the total number. A few things to note with the earnings season. Alcoa beat earnings. They're trading higher after hours. Adobe had some talks today that they might merge with Microsoft, and the shares just went flying up. Pepsi missed earnings this morning. They beat on the top line, but they guided lower. And jobless claims in the U.S. decreased to a 3-month low. I'm going to go over the upgrades and downgrades in just a moment. I just wanted to reflect on a couple things that happened today. Gold fell off about 33 points. We made a high at 4 a.m. this morning at 1366, and then we were currently trading down in the aftermarket session at 1333, so a 33-point drop today. It's a pretty big drop, but look at the run we've had. There's no indications that would make me anywhere bearish on gold until we at least get below the 10-day moving average. Also, crude oil slipped. They put in a high of 84.43 around 10 a.m. and then we started to decline, and we hit a low of 81 today. Now we're trading at about 81.39, and then the dollar got a little bit of a rally. I can't take the rally seriously. We're still in sell mode for the dollar. It's going to be interesting to see how things actually play out tomorrow with the non-farm payrolls coming in. I'm going to start with the downgrades. Only 2 stocks were downgraded today that were notable. Equinox, which was 115 to 83, that was pretty big downgrade right there. And then we have Walter Energy, symbol WLT. And something I wanted to note here, the Walter Energy, being they downgraded that. Also CNX, MEE, a lot of the coals finished down today, and the XLE ETF, the energy ETF, finished down today as well. I think a lot of that's, some of it has to do with coal, some of it has to do with oil. Alright, now I'm going to start with the upgrades. We have Yum Brands, and that's 44 to 55. Remember, they reported, I believe it was on Monday, and they blew away earnings, so they raised the price target about 10 points. LDK Solar, that's 8 to 11, and this one, solars have been on fire lately, so it's good to see they're finally getting upgraded. Fiserv, symbol FISV, upgraded 50 to 54. Medco Health Solutions, 50 to 55. Endopharm, 36 to 44. That's an 8-point upgrade. ZoomZ. Now ZoomZ got 2 upgrades today. I only listed one, but they were both up to $27. Intermune, ITMN, got a upgrade 14 to 16. Amazon, 161 to 81, and that was by RBC, so we could take that pretty serious. Family Dollar got 2 upgrades today. I only listed one, and that was up to 49 due to the earnings beat they produced last week. And then Texas Roadhouse upgraded 16 to 19. That's good to see that restaurants are being upgraded. Tomorrow we don't have anything on the earnings calendar, but economics pretty big. We're going to have a lot of volume that comes in tomorrow pre-market, so the open's going to be pretty good. It's always the first week of the month where all these employment rates come out, just in case you guys didn't know. And it's these nights. Tonight I'm going to be up pretty late, probably till 2, 3 in the morning. And this is only because you have to be very prepared, because if you have the right plays and you have the right information and you do enough research on all the events that are coming out on the economic calendar, that will put you ahead of the game on the guys that didn't stay up late and get the research taken care of, so they would have an edge trading in the morning. So I'm going to have some great plays. I might do a video later to list what I'm looking at, but we have non-farm at 8:30, non-farm private also at 8:30, unemployment rate, hourly earnings, and average work week. All these that you see right here, I'd rate an A if they're an A to F grade on economic report. And the wholesale inventories, I'd say probably a C, maybe high D. That's what I'd rate these. So they're not major, but these we really need to look out for. Today, taking a look at the one-day performance chart. Conglomerates, healthcare, and utilities finished in the top 3, and the worst performers were basic materials, financial, and consumer goods. Starting off, taking a look at the Dow today, we finished up over this superior support level around this 10,942 to be exact, and we actually got a close over it today. Now if the number comes in bad tomorrow in pre-market, I can assure you that 10,835 will most likely be tested. And if that is the case, let's look for a short-term bounce off of it and maybe trade up to the previous today's low, which was around 10,900. That's just one case scenario that could possibly happen. Now if the number's better, there's a good chance that we could finish back up at this 11,000 is a psychological number that we need to approach and get a close over to presume up to our major resistance at 11,055. Now I'm looking at the SPX, and 1158.24 is the support level. As you see, this red line right here represents that. And today we got to close at 1158 exactly. So right on the level. If we get a beat tomorrow, we're looking for 1170 to be the next projected target. And if we miss, 1150 will be some substantial support, being that that's the level that we couldn't get past for the previous week. And then 1145 will be our counter support play. And now we're looking at the NASDAQ. And the NASDAQ out of the Dow and the SPX looks by far the best. It's the most enticing chart-wise. Usually, I'm going to show you guys what happens. Usually when stocks tend to trend and then they tend to consolidate, right when they get in the consolidation period, that's when the big players start putting their money to work. They start lightening up on their positions and they start doing extra research to see whether we're going to break out or we're going to break down. A lot of times some people will get faked out. It's not because the computers are trying to fake you out, even though that does happen while you're day trading. It's because people are thinking different things about their positions. For an example, this day on Monday they sold it off and then they came down right to our support and they ripped it right back up. You know, information is very valid when it comes to these kind of circumstances. So tomorrow, like I said, we were trending. Now looks like for the last 2 days we've been in minor consolidation between, let's say, our 2400 resistance level and our 2370 major support level. Now there's people positioning themselves for the number tomorrow, but as far as the technical standpoint, the 50 still is turning up and we're holding above the 2370. If we break below the 2370, the only conclusion will be 2340 will be tested, and it will be some decent support, being that we Actually, we sold off to it on Monday, and as you can see, we've traded off of this level a few times over the past 2 weeks. So I can't wait to see how the numbers come out tomorrow. Now we're looking at the dollar futures. As far as they go, I could only be bearish. I mean, we couldn't even get a close over the 50 period moving average today. We still have this declining trend line dating back from almost a month ago. The only way I would start to get bullish on the US dollar is if we got over the 78.50 declining trend line and then got a close above 78.17, which is this blue line, and it's the high that we put in on Tuesday. Short term, that's how I'd get bullish. Otherwise, there's really nothing I could say. We're still in a bearish sell-off. As far as crude oil goes, we got a close below our 82.74 support along with our 50 period moving average on the 1 hour time frame. Short term, that proves to be bearish, and then you have the descending 50 to go along with it that could presume down. A couple things that could happen tomorrow. If we do bounce back up to this 82.74, I believe that there's going to be some sellers there. So short term, the move was very violent in crude oil, and we could only presume that there were serious sellers in it. That's not an incomplacent scenario that we could just undermine because of the huge run-up that happened. So we must take this into consideration that 79.67 will only be a bullish consolidation if we get down there tomorrow. If we see below today's lows around the 81 level and then presume down to our major support of 79.67. I'll highlight this more in detail in tomorrow's video. Now we're looking at gold on the 1 hour time frame as well. Gold's, like I said in the beginning of the video, we're still in a bullish uptrend until we break below the 10-day moving average on the daily time frame. As far as short term, we're trading at 1334 right now. If some way we could get above 1335 and hold, 1339 will be short-term resistance, but I think we could start presuming back up, and this could just be a little base forming, maybe a little cup and handle, and then the 50 would eventually have to turn back up. But as we're speaking right now, the 50 could keep turning down, and if we stay below this 1334 level, as you can see, right, or 1335, excuse me, then look for a move eventually. I'm not saying it's going to happen quick, but this 1306 level will be here before you notice. Now, I don't know what's going to happen with the dollar or with the numbers tomorrow, but we have to factor all the potential catalyst in with our thesis, trying to determine this trend. And tomorrow will be a great piece of information where over the weekend we could digest everything, and then we could come out with a fresh start on Monday. We have valuable information, and we'll be able to make some reliable decisions on how to either get short or be long during this next week coming up, because I have a feeling it's going to either go in one direction or the other hardcore. I don't feel there's going to be much consolidation like you've seen in the previous weeks. As for the VIX, I mean, we put in a low of 16 today. I have support at 1593. Now we're trading in this range between 1649 and 1693. It looks like the October calls were more active than the puts. That really doesn't tell you a lot. The chart looks very bearish. So until we get over 1649 and hold this time, I cannot get bullish in the VIX. Now we're looking at the semiconductor index, the SOX. We have a short-term downtrend going on here, but we sold down to our 340 level back here on Monday, and we actually got a decent bounce off it. They brought us over our 348 level, and right when they try to hold it above the 50, they sold it down. So currently the bears have control. All that could change tomorrow. The SOX could actually rip. If it gets to over 348, it will break out of this short-term downtrend, and it could presume back up to 356 and test the previous high. On the contrarian side, however, we could get back down to 340 and use this trend line in the 340 as some support. All right, good luck, guys. Good luck with the number tomorrow. I'll talk to you guys tomorrow with the weekly recap video.